Welcome back, and joining me for a look at the day's markets action is Anthea Gardner from Cartesian Capital. Thank you so much for your time, Anthea. It's been quite an interesting month. It is the last day of trading for September. It's actually gone by pretty quickly. I mean, going into this month, the sentiment was a little bit shaky. The expectation not so good, as historically people had said that September is usually one of the worst months. But it's turned out way differently. Has this basically just bucked the historical trend?
All the little sayings that we have in the market. Yes, I think so. So today markets were not as buoyant as we've become accustomed to in the last few weeks.
Yeah.
I think investors are concerned about geopolitical tensions playing out in the Middle East. But despite that, our 10-year bond yield dropped below 10% briefly for the first time in over 2 years. So what we're seeing is foreigners buying our bonds and selling our equities. And I think that's a combination of the Chinese stimulus from last week and definitely positive sentiment in local markets that's driving this rally. I guess like all investors right now, we're asking how long is this rally going to last?
Yes.
Admittedly, I thought last month I was saying, okay, it's time to start buying a few puts here, just in case, there's profit taking and the market starts coming off. But yeah, it just keeps going. This rand is something else.
Yeah.
We lost a bit of ground today during intraday trading, but it's still looking comfortably strong at 17.23, I think, well below the 200-day moving average of 18.47. And I think there's a couple of things at play here. Everyone's waiting for Powell's speech, and although I think the commentary over the weekend, you saw a few analysts saying that the Fed may cut another 50 basis points. And this is despite Powell going to great lengths last week to say that the last cut, or the week before, sorry, the last cut was an anomaly, and he was managing expectations. I mean, the Fed hasn't cut 50 basis points very often historically. But if this does happen, then no doubt the ZAR will trade below 17 against the US dollar. What it does, though, is give us impetus to cut another 50 basis points in November, although the chances are rare, shall we say.
Indeed.
I think we all know our central bankers are fairly hawkish. But the Fed, even if the Fed doesn't cut 50 basis points, they've still got 2 more cuts this year compared to our one meeting in November. So we could see a nice continuation on the strong rand, which of course, I don't have to tell you, Zanati, will play very nicely into CPI number coming off quite a bit, because all our CPI is all the factors are so exogenous.
Yeah, which would be good for our retailers. And a retailer that came out with numbers today is SPAR, coming out with a trading update looking at group turnover. We did see growth there, but I mean, quite varying performances when you look at the different geographies that they operate in. We saw the share price down, I think, over 2%. What conclusions did you make out of those numbers, Anthea?
I was going to say an interesting segue from lower CPI and stronger rand. But actually, they reported a 4.1% increase in turnover for the 47-week reporting period, because that's all it really was.
Yeah.
They said that even though the 7 weeks to August the 23rd was adversely affected by fluctuations in the exchange rate.
Yeah.
So kind of listening very carefully to what you were saying. But SA sales grew by 3.5%, while Switzerland turnover declined by 5.8%. And so you can see this kind of ongoing battle between a historically depreciating currency, having overseas hard currency revenue.
Yeah.
But then suddenly the rand strengthens and then you're stuck a bit. So I think it'll be interesting to see their full results and how this is going to work for them. The company made an effort to point out that they remain focused on getting operating profit margin back to 3% by the end of 2026 financial year, they said. And they continue to make progress on the sale of their Poland unit. And this is interesting. They continue to review their European portfolio and accelerate decisions in the coming months. So I always feel like Spa is one of those, like Mr. Price. It's always perfectly priced
Okay.
for whether it is in the market. So very interested to see full year results.
All right. Well, let's go into Netcare quickly before we go to your stock pick, because they came out with a year-end voluntary update saying that they're on track to meet their full year guidance. Of course, metrics positive, but not really mouth-watering. But I mean, are these the kind of numbers that we can expect from the private hospital group space?
So not a lot in the voluntary update. They say they're on track to meet guidance, with revenue expected to grow between 5.5% and 6.5%. CapEx pretty much in line, despite, they said, the constrained economic growth, high employment, and job losses in the formal sector, which obviously has a negative impact on medical aid growth membership, which I think Netcare definitely needs. Nothing said about NHI, unless I missed it.
Of course, we will see, because, of course, they are still having interactions and conversations with government. So I guess not really much to expect out of that. Anthea, let's get into your stock pick for today.
No, I'm choosing Grindrod. I know this is a stock that kind of falls out of favor very often and then kind of bounces when no one's expecting it. But I think there's a lot of interesting things on the cards. They're buying the remaining interest in the Mozambique port from that Mauritius business for $77 million US. The Durban-based logistics company currently owns, Grindrod, currently owns 65% of this port. Predominantly, it's dry bulk. It's a dry bulk terminal. And I think kind of between that and what we're expecting, the turnaround we're expecting from Transnet, I think it's a nice entry point to get into Grindrod now and hold it for a bit, and see and kind of take advantage of what I expect to be some upside performance.
All right. Well, thank you so much for your time and for your analysis on what has been moving investor money today and this month. And Anthea, that was Anthea Gardner from Cartesian Capital.